All right, well, so let's get started. So we're going to get into, like I said earlier, we're going to kind of a working workshop here today, kind of a workshop where everybody can kind of get involved in it. So feel free to ask questions. Kind of more interactive, the better. And so, how to identify trade markets, tops and bottoms, trading tools and tactics used. So. A little background on myself. I've been actively trading for now over 35, 40 years. Started my trading career back in the 80s on the crude oil side, and was fortunate enough to get a job with a company called Coastal Corporation back then. And they would actually train you to trade crude oil. So they would, had a group of cargo traders and fuel oil, all kinds of different trading groups. And, I was able to get into that cargo trading. So they sent me down to one of the refineries at Corpus, Texas for about 3 months. It was fantastic. Kind of learned the fundamentals of crude oil, bringing, the oil tankers in, and then the refining process, how to put it through the refineries and various products that came out. So ended up in the shipping department, and that was a really great experience, learning how to schedule tankers and the crude oil and all the stuff that went in. And then finally got on to the crude oil cargo trading desk, and spent about 5 years with Coastal. Sent me out to Singapore for a couple of years, traded products and all the different Asian crudes. And then in the mid 80s, was hired by a company called Trans World Oil, and at that time they were the largest oil trading company in the world. So it was Trans World, Fibro, and Mark Rich. So really exciting experience there. Spent about 17 years there at Trans World. And then ran the international trading desk out of Bermuda for about 10 years. So that's where, really, cut my teeth as far as option trading, all the different directional trading. So we had a lot of different directional trading models that we put together, and, pretty much traded everything. We traded the foreign exchange, all the different futures markets, crude, you name it. Basically, if it had a price and it could move, we would basically trade it. So a little background on myself there. Now, what I want to, get into today is, kind of how to go about and use directional trading tools, and looking for the different trading setups based on cycle changes, and then kind of go through a lot of different trading examples to show you how some of these trading tools that I use work. So let's get started. So the following interactive presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So trading, is a never-ending journey of learning to expand your trading knowledge and skills. And, what I've learned over my kind of 4-decade trading journey is that to become a better and more profitable trader, you really need to be able to read the charts, understand the technicals, and then manage your trading risk. So when you look at the fundamental analysis, it's really important because it can really lead us to some great companies with good potential for growth. But when it's all said and done, we're really going to make the money on the stock price, not the company. Now, when market uncertainty clouds the fundamentals of companies can quickly become worthless. So, right now we're in a lot of uncertainty with all the different tariffs that's coming out, daily, and then the inflation, CPI, all the different numbers. So there's always that uncertainty. Now, the best way then for me to explain to you how to, to achieve your trading success is what you want to do is you want to define what's what makes a successful trade, and then break those successful trades down, and then break it down, and then look to create the steps involved making that trade successful, and then have the discipline to follow these steps for each and every trade. So if you go back and look at all the different trades you've done, you'll probably recognize certain patterns and certain things that you did right in a certain trade that made it a successful trade. And then you can also look at your losing trades and see the same thing. So what you want to do is identify the steps that made those trades work, and then follow those steps each and every time. So this is kind of what I put together is a systematic directional trading process based on, going back, all over the years of trading experience that I had, breaking down the trades that work, and then trying to follow those same steps over and over. Now, step one is we'll go through kind of a step process that I use. Step one is for planning your trades. You want to, have certain directional trading tools, and then the tactics, to follow that you can identify and do this each and every time. So this is kind of 11-step guidelines that I've put together. So first off, find those trade opportunities based on the macro trend, looking at the big broad market trends from what I call macro. We can use our charts for that, or you can use your fundamentals. And then we want to be able to incorporate seasonality into our trades, because there's so many different strong seasonal factors in the market that can push markets up or down. So we want to be aware of that. And then, look to industry specific. You want to look to rotation, where the money flows are coming into certain sectors of the markets and different industries. And then second thing I'll do is I'll scan a database that I put together of stocks and ETFs, looking for certain patterns that I want to follow. Now this database, and what I do is I'll check against the stocks. I'll look for what I put together 5 selected high winning chart patterns that I like to look for. And then those are the kind of trade setups where I pull trades from looking at those specific patterns. And then I'll validate the stock's relative strength based on momentum flows and relative strength of the market sector it's in. So it's really important to look for those stocks or ETFs or whatever you're trading. And I like to use momentum to show the kind of potential forecast of direction based on the momentum, momentum surges and stuff that create price movement. And then we'll evaluate market conditions based on, if the markets are in a kind of a low cycle or high or very extreme market uncertainty type of conditions. So we want to kind of quantify that. So are we, high, low, or extreme uncertainty? Right now, we're kind of in the higher uncertainty, range, try to, digest all the different things that are coming through with the new Trump regime. And so there's always going to be uncertainty. So you want to kind of quantify that. And then that can help you to kind of adjust your risk where you're trading at that specific time. And then 6, we want to establish our profit targets. So I always like to put together profit targets, of any trade that we're looking to set up before we get into the trade, to know where we think that it's going to go. And then that's where we can kind of put our game plan together as far as profit taking. And then 7, establish trigger points for your stop loss, to help you defend the trade. We want to set up the trigger points based on either moving averages or Fibonacci levels that will help us pinpoint where we want to start defending trades or put stop losses in. And then finally, 9, place the trade. 10, manage that trade, and then monitor the trade into the close or expiration if we're using options. So these are some kind of basic steps that you can go through to help your, trade kind of put together a checklist. So, go back and, look at your trades, put together something like this, or you can follow this kind of outline of a checklist that I put together. Now, the other thing is you can't trade blind. So to trade market cycles or swings, you need, good trading tools that can help you to identify market cycle turning points. So I always recommend some kind of trading model or system where the trading rules are based on a repeatable, successful trading process that's, clearly defined, which makes it more, easy for you to implement your trades. So a really great trading system is one that you can use and adapt and use across all the major asset classes, being futures, foreign exchange, stocks, or whatever. And you can also use it for a short term for your intraday trades or intermediate or long term kind of trending trading. So a really good system is one that you can just really adapt across all the different time frames and asset classes. So important to have that. So I'm going to go through the kind of trading system and model that I use today and show you how it works and show all the different trade setups that we use for this particular model. Now that when we're trading market cycles in any market environment, the system I put together and designed uses a rule-based kind of system to highlight kind of what I call the intrinsic rhythm of the market. So, when you're trading markets and anything really, there are always going to be some kind of cycle to it, and everything has a little bit different rhythm to it. So you want to get kind of familiar with that and look for the different swing cycles. So what I've put together is what I call the power cycle trading system or model. of indicators, which allow me to kind of anticipate price activity rather than reacting to it. And the system that I put together is based on 5 really high winning chart patterns that I look for, which we'll go through. A directional cycle timing model, so looking for cycles in the market. So when we're swinging up and down, we want to try to pick off these cycle swings, the tops and the bottoms, and that's where we're going to try to identify to get in. So that's very important to kind of get into that kind of the rhythm of the market, that intrinsic rhythm. Now, the other thing that we want to be aware of are we getting into very overbought, oversold market conditions, where markets really get stretched, maybe too extended to the upside or downside. Now, when we get into those kind of conditions, at some point, we're going to see exhaustion to the market. And that's going to be a great place to get into for these cycle swings, either to the downside or back to the upside. So at some point, we're going to get exhaustion where we're going to run out of, buyers, and then we're going to have that more potential to move down, or we're going to get exhausted where we run out of sellers and we finally take the move back up. So I look for those things, and with the trading system I've designed, we can identify these oversold in the extension areas. And then the really other key, very key component is momentum flows. So we'll go through how that works. And then we want to use what I call fractal time frames, or different, additional time frames to break down the different timing frames. So we don't want to depend on just one time frame. We want to use multiple time frames. And then I like to incorporate moving averages, which I refer to as kind of automated trend lines to track trend and look at trend breaks. And then another really important part is Fibonacci, using that for your key support resistance levels and for identifying targets based on that. So when you put all these kind of different ingredients together, it really then sets up and gives you guidelines which you can follow, allowing the trades to come to you. So whatever model that you use, know the guidelines and the rules you put together and put down, and stick to those. And so what that's going to do is really going to help you to take your emotions out of your trading, and that's basically what ends up sabotaging your trade. So the end results, again, of using the trading system is that you're going to make your entries and exit decisions based on your model that you're using, and not your emotions, that of fear or greed that's going to sabotage those trades. So many times, we can, be FOMO, where we're chasing trades, we're fear of missing out, or we overtrade. So these are things that you want to put under control. And if you have a certain system and guidelines put in place, you follow those, it'll make you more disciplined, where you're not going to, do a trade out of just, trying to jump on something without thinking through it. So that's a really key part. Take your emotions out of your trading and make it more systematic. So step 2 is the directional cycle timing model tools that I use. Now, the really key thing that I really fall back on is momentum. So when you're trading in any type of market environment, it all really comes back down to price direction, timing, and then managing your risk. So, again, if you go back and look at all your winning trades, you keep a log, and you look at, what makes them a winning trade, you're going to see that probably the 3 main components is that, 1, you got the price direction right. Secondly, you got the timing, which is your entry or your exits correct. And then you manage your risk. You got out at the right time, or you had good stop loss levels, or you used options. So these are 3 things that you can, I think, go back and identify. So, every trade that I look at that I've made, all the really good ones, it always comes down to you got the price direction right, and you had the timing right. So these are really important parts of your trade. So check those out. And then for picking direction and getting the forecast of which way it's going to go, up or down, the things that really has helped me the most out of all of the different tools and indicators is to use momentum flows. So these are different indicators we can put together that measures momentum. So momentum indicators, and what they're basically doing, they're measuring price strength or weakness. And when we're using it across multiple time frames, this really sets up and creates a, what I kind of refer to as a dynamic trend trading following indicator that you can use. So a couple things that your momentum flows will help you identify is, first, These can help you to identify new price cycle trends early, okay, before everybody else jumps in. Second, helps to validate the strength or weakness of a certain security based on the momentum of that security. And then based on that, it will help you keep in your trade longer to maximize those profits. So when we have a security that has really strong momentum across multiple time frames, this is going to be a trade that potentially has a good potential to trend further and further in time. And those are the types of trends that we can catch. That it's kind of like a wave that you can really stick with it, So the stronger the momentum based on multiple time frames, the stronger the potential trade is, either for an up move or a down move. So those are things that we want to try to really identify using momentum to measure price movement. All right. So step 3 then is your other trading edge, which is timing. So this is such an important part of all your trades, is your timing, your execution. So by incorporating then multiple time frames or fractal analysis, this is what's going to provide better clarity to the overall trend and market you're looking at. And this is then used for your swing trades, or you can use it for intraday trades as well. Now, what I like to do is I look for a longer term time frame that I'm going to use for the basic trend. And what this does is it allows you to see the bigger picture. So in order to get the idea of general trend, I kind of call this the anchor trend. I'll look at a certain longer term time frame. So when we're looking at swing trades, those are what I kind of refer to as a medium term trend. I'll use a daily time frame for that kind of swing trade time frame. So daily, and kind of also being aware of the weekly. So combining those two together, that gives me what I call my anchor trend or general trend that I want to trade with. And then what I look to do is use the shorter, lower term time frames to help to plot the actual trade entry into that general trend. So you should then have alignment, of your lower time frames with the general trend to show you the trend strength or weakness, and then to navigate into that trend. So you're not going to get the whole picture by using one time frame. So let me just pull up a kind of a notepad and kind of illustrate what I'm talking about here when I talk about alignment. So when we're looking at basically using the indicators that I use, which we'll go through in a minute, what I want to do when I'm looking to get into a kind of a swing trade trend, so kind of based on the daily, I want to try to get in with the cycle, right? So, when we have a cycle, maybe we've been trending down, and then we start to make a turn and we start turning back up. So in order to identify these cycles, either swing cycle high, like here, we're starting to turn over, or a swing trade low like this, what we want to do is use multiple different time frames. Okay, so that means like you could even break down, start using like a 5-minute, and then what I like to do is 30-minute, hourly, like 4 hours. So you have all these multiple time frames. Now, when you put them all together and they start shifting and going in the same direction based on momentum, that is then when you enter, you're looking to enter that cycle trend there. So just think about this as the daily price, that line, and then what we're looking for to identify that trend change is we're going to use momentum across different multiple lower time frames. And so when those start going positive, that's going to give us a really good indication that price is starting to change and turn on that medium term trend. All right, it's kind of like trying to turn a big tanker around and in the market. So it's a gradual turn. So that's kind of a lot of times the markets, or sometimes they're sharp turn. So we'll go through the examples and I'll show you kind of what this alignment is, but that's kind of the basic kind of idea of following the trend trading cycles using momentum. All right, so we'll go through how that works and I'll show you the indicators and how they all kind of line up. Now, step 4 then is the kind of high winning probability chart patterns that I look for. So over all the different many years that I've been trading, I've kind of identified specific chart patterns that tend to be good, patterns to get in to look for your trade setup. So I'll show you kind of the basic 5 patterns that I like to incorporate. So the first one though is kind of what I look for within the other four. So this is what we call the volatility squeeze or the volatility compression breakout pattern. So basically what this pattern is it's when markets start to kind of compress and kind of consolidate sideways, they just start churning, okay? So this is a really a fantastic pattern to be aware of and to identify. Now, the other four then patterns that I like to look for is what I call the cycle high reversal, which we'll go through. And that's when the markets get to, over all your moving averages and they start to cycle and start to swing back to the downside. So they start to reverse, okay? So this is where you run out of, buyers. This is where you get the buying exhaustion. So we look for this specific cycle pattern here. So that's a cycle high. Now the other one is kind of the opposite. This is your cycle low. So when the markets have been sold off really hard and they start to finally run out of sellers and they then start to bottom out and turn. So that's the cycle low reversal. And then the other one is the cycle low retracement. So this is when you retrace into key, substantial moving averages. So you retrace to maybe a 50 moving average or 200 or something like that, and then you bounce off of that and start to turn back up. So that's the other pattern I like to look for. And then the other one is your cycle high retracement. So that's when your market, you've been, swinging up, have a good trend up, but then you run into some overhead major moving average resistance. It could be a 200-day or a 50-day, and you bounce up there and you get a rotation back down. So these are the four different patterns. And then within these patterns, if I see a volatility compression squeeze, that's the one that I really kind of focus in on. All right, so it's, again, kind of a step-by-step process to piece it all together to then identify the best trade setups. All right, so those are the kind of basic patterns. So, let's go through the volatility squeeze. I'll show you a couple of examples of what it looks like here for the squeeze pattern. Now, again, when I'm looking at the volatility compression squeeze pattern, so it's basically identified as a period of price consolidation. So that's where your prices of whatever security you're trading starts kind of to coil, in a really tight pattern. And then at some point, it's going to break out of that and break either up or down. So, the markets, a lot of times what will happen, you'll get a huge rip to the upside or downside, big pop up. And then the markets, they don't just go straight up or straight down. Then they'll just kind of recover. They'll go sideways, regaining energy, and then take that next step. So it's kind of like sometimes a stair step, right? You'll get a big move up, consolidate sideways, move up, or the same thing could happen to the downside. So these are the compression patterns that we can look for, and with certain indicators, we can pick those up and then identify them and be ready for those patterns for potentially when they break out either up or down. All right, so that's a really big key. Now, then when the security you're trading has multiple time frames in this volatility compression squeeze, then these breakouts can even be even more powerful with greater follow through, and it's kind of like a chain reaction. It's like a tsunami almost. You get a lower time frame that triggers the next time frame, which triggers the next one, and all of a sudden you've got a great trend that's developed. So this is kind of what I call lightning in a bottle when you get this kind of pattern that's really tight with multiple different time frames, and they all start to break out and trigger each other. So it's kind of like that tsunami, earthquake type thing that just ripples all the way across. So it's this kind of chain reaction that sets off then by that lower time frame of volatility squeeze. Then that can set up and ignite the next time frame, so on and so forth. So it becomes a really fantastic trade setup to identify for your swing trades and even your intraday day trades, because it gives you that big timing edge that you're in and out of the trade quickly. And remember, time equals risk in trading. So the quicker that we can, get out of a trade, the less risk we're going to have. So that's what makes this pattern a really great one to identify and look for. So basically, here's kind of an example. This was actually a 5-minute chart on Apple showing this volatility squeeze. So with my indicators, I've coded in this squeeze pattern that I've put together some rules for. And when these dots show up, that's showing it is starting to go in this compression squeeze. And then I have the dots color coded based on momentum, which I'll show you here in a minute. Now, just in this little small example, you can see price is just kind of bouncing around here in a narrow range. And so at some point, though, it's going to either break out to the upside out of the range or downside. So with our momentum indicators, which I'll show you next, that's going to give us probable direction. And then what I like to do is what I call my price trigger is typically I'll look for the breakout of those highs right here. And so you can see this little high pattern there and your low patterns there. So, once you get this squeeze going on and we have our momentum telling us direction, then once we start breaking that trend pattern, like that horizontal, upper band or the horizontal lower band, or say a trend line, then jump into the trade. So that's kind of the basics that I'm looking for. But the first thing that we'll look for is a squeeze pattern, okay, which the indicators will identify. And then we'll use momentum to give us probable direction of that breakout, either up or down. All right, so here's a really good example actually of Netflix, which had multiple different squeeze setups in this pattern or this time frame. So you can see back here, see how tight the price was. So you can see these dots, they're green and purple and magenta. So they're linked to my momentum indicator. So when momentum is up, they're going to be green. When momentum is down, they're going to be this magenta. But the main thing is that identifies the squeeze. So you can see it just churning. Now, once we break kind of that top of the pattern, the highs there or the low, that's the trigger point to get into. So here you can see momentum right there. See, it crosses up above zero, so it's positive momentum. And so I have two different momentum indicators that I use. The first one I call it cycle low indicator 1. And so what this one is, it measures momentum at a much faster, more sensitive rate. Okay, so it's going to be very, very sensitive to market price momentum changes. And then the second one is slower momentum, which is going to confirm this really highly sensitive one. So when I first put together the system back like in 2010, I was just using lower study cycle 1, which was fast. And so what was happening is I was getting in and out of too many trades too many times because it was so sensitive. So I smoothed out that by doing a slower momentum indicator here. So it really worked great. So basically, I'll go through the rules here a little bit later, but so when we get cycle 1 going positive, and then when I get 2 positive to confirm that, that's when I get the confirmation of momentum. And that's when then I look to get in for a breakout of that price trigger, breaking those prior highs for an upside move or prior lows for a downside move. Now, the other thing too is, first off, though, I'll see a cycle reversal, which comes sooner. But anyway, those are kind of the patterns. So cycle reversal, cycle 1 momentum, positive 2, and that triggers the entry. So that was a really good squeeze. You can see here's another one right here, a very tight one. Then we had a cycle reversal down here. Cycle 1 goes positive 2, jump in the trade right there. Enter the trade. That's your price entry right there. And then it gets up here, you can see it had a nice push up, and what happens? It starts looking at momentum, starts to pull back, right? So starting to fade here, starting to run out a little bit of momentum, running out some buyers, starting to stall out. And then finally it consolidates and holds this key moving average here. You can see the moving averages kind of like those automated trend lines. Then get another squeeze right here, okay, for the next level up. So cycle 1, first cycle reversal, momentum, cycle 1 goes positive, 2 confirms, and then a break to the upside. So that's kind of a basic, kind of the progression of that pattern. So it's a really great pattern to follow. And I've been using these same indicators basically since, started putting it together back in 2009, done some different tweaks to it, but really started using it in 2010, all right? So that's kind of a look there. Now here's another really good example. So this was just kind of Marvell, and what I like to look at are, like I said, the multiple time frames. So another time frame I really like to follow is the 4 hour, so which is just a little bit less than a daily. So the daily is what I refer to as the medium-term trend for a swing trade to run, and then I want to have alignment with the 4 hour and typically with the 1 hour. So here you can see this was a 4-hour squeeze right there, really tight. Okay, and then here was a daily squeeze, so we had that combination. So this had a potential for a really nice move, and then we had cycle reversal here on the 4-hour. Cycle 1 goes positive, and then the same thing 2 right there, and then boom, had a nice break to the upside. All right, so you can see here it broke out. This was around 75 and went really quick from 75 basically up here to about 82 or 83. So that's what makes a great trade. You get that edge from getting in here, and then once you're up here, then you've got that trading edge that helps you stay with the trade. You can adjust your stops and then look to trade it for the next move up. Or if it breaks, you've got such a great edge in the trade that you're not going to lose any money, because you've got what we'll typically do is we'll put in an adjusted break-even stop. So for example, if we get a set up right here and we get a breakout, we get a big spike up, we'll take some profit here, okay, and then that profit gives us the edge to adjust our stop. Back to everything here, and if you have any questions, feel free to ask. What time is your trading room? The trading room starts at 9:30 Eastern, so 8:30 Central to 9:30 Central every day during the week, and come in, if you have any specific questions on any of your trades or see what we're doing. So I'm open there to, help out and show you what we're doing. And then question, how useful are Fibonacci levels for Fibonacci is so super important. It's they're very useful. So if you're not using Fibonacci, I highly recommend it. And in this course, with this course, you're going to get my Fibonacci price target mapping course, which will teach you how to use Fibonacci along with moving averages, support resistance, a lot of other things, which we'll talk about. But very important to incorporate Fibonacci in your trading. Now, here are the other patterns I want to go through first. And then what we're going to do next is we're going to go through seasonality, and then I'll go through kind of a market, what I call top-down market review, and then show you some of the other trade setups and the indicators, how they work. So here's a pattern, a pattern that I like to look for. This is what we call this cycle high reversal. And what I like to do with this is when we're in a really strong trending market, either up or down, I like to kind of first look over to the weekly time frame, which I refer to as long term. Now with this indicator, this indicator, you'll get this with the course. These are extreme range bands, okay? So what this is showing you here is that this is based on average true range. And when we get to this blue one is like 3 really extended. So this is like 3 ATR. And when a normal price move should be from this 20 period moving average to about the 2 ATR. So markets tend to kind of trend like that. But when we start getting really extreme, when we get to that 3rd ATR like this, that's where we start looking for potential price to stall out. Okay, so buying exhaustion. So then you can see the reversal arrow here. So this is the indicator. So you'll get this indicator. And so that's based on the cycle reversal indicator here. And so this is showing you the market's getting extreme, okay, it's stretched. And so it's potential for a mean reversion back to, kind of the mean moving average. So that's a good example there. Here's another one right here. So we get up here, we're starting to get stretched, and then we get the cycle reversal and we get that mean reversion. Here's one to the downside where we get oversold to the downside. We got a cycle reversal and a movement back up. So this is a cycle high reversal, and that's based on these indicators are great for that. Here's just another example. Here's QQQ, a cycle high reversal on daily time frame. So here you can see it just trending up, and then you can see this cycle reversal, that arrow right there. It's based on this indicator down here. And then look, see momentum. Here's my momentum flow. Cycle 1 starts to go negative. I get confirmation here, and we have a big breakdown right here. Okay, but the first signal is this reversal signal here from an overbought kind of getting stretched. Okay, that's the first signal that we look for. And in the course, then I'll show you how this all works. And there are 5-step trading rules that I use. So in the course, it's really black and white on how to use these indicators. So that's what the course will be teaching you, how to set the indicators up and how to use them. All right, so that's a cycle high. Now here's the cycle high retracement reversal. This is when it retraces to a key moving average resistance point. So here's like SPY, the ETF, and you can see it had a strong move up, but it's coming into here. This is like the 200-day moving average, okay? And so that's a really strong moving average, and you see then the market reverses off that right here. So you had a cycle high reversal, this arrow boom, and then kind of starts fading and moving down. So that's a cycle high retracement reversal. Here's another one. Here's on XLK, the technology ETF. You can see it strong move up, but then comes into this overhead resistance, that 200-day moving average. Get a cycle reversal there, and down she goes right here. Okay, cycle reversal. Momentum indicators are starting to go down. We get that big sell-off. Okay, so that's a cycle high retracement reversal on a daily. Now here's a cycle low reversal. Okay, so these are when markets are in extreme selling off phase, right? So here, as you can see, the SPX just a massive meltdown. It's just really selling off hard. So these are my extreme range bands, which you'll get as part, in the indicators. You'll get these extreme range bands, but you can see the price just keeps really selling hard to the downside. Now, look how momentum. See, cycle one is negative right here, and two's been negative. So the way that these indicators work, they're fantastic for when we get in a really downtrend, because until two starts to go positive, you can just get these, these false, reversal breakouts. But in the course, this is what we'll go over, how these indicators work. But then you can see right here, we get the cycle reversal. So that's given us our first sign or signal that there's potential change in cycle happening. Then cycle one goes positive. That's the fast momentum. And then we start getting confirmation here with cycle two right there. And then we start to move back to the upside. And finally gets enough stability and momentum to turn that corner. All right. So that's something, a really great example. And then the other indicator you'll get with the course is this momentum reversal indicator, that orange arrow. So this will be explained how it's used in the course as well. So these are all the different tools that I've put together and used for all these trade setups. And these are basically what I use for all the alert signals that are sent out to my alert service. These are all based on these indicators. Here's another really good example of a really big cycle low reversal. This was on IBM. And these can be some of your best trades, all right? So big sell-off at IBM, just really trending lower. And then finally, see, we have momentum really hard down, negative, cycle two, really hard down. And then finally, we get the cycle reversal. So that's your step one, which we'll go through in the course. And then momentum one starts to go positive right here, that arrow right there. And then two goes positive right here. See that arrow? And then we have the momentum cross here, and then up she goes. So it's a really defined, great rule-based indicator system. And you look at the price, these prices are super affordable. So if you want all these indicators, if you want everything, it's, again, just come here real quick. I mean, you're not going to find any tools that work this well for this price anyplace. If you do, let me know. Okay. So just come down here. These are all 8 of the indicators here. Put that promo code in. All right. So it's a really great deal for you if you need trading tools, so you're not trading blind. All right. So this is, I showed you that, and then here's a cycle low retracement reversal off of the retracement reversal. So here's QQQ. Selling off hard. Here it comes into that 200-day moving average. And so look at the pattern that you're seeing. So big sell off, okay? And then we start getting these cycle reversal indications right there. All right, so now, but momentum is still negative, right? So this is where you can get those false starts to get back in. So here, if you got in, you would have been, run over. Here you got in, but look what happened. So finally, we start getting cycle one going positive, and then two goes positive here, and we start getting this movement back up. Now it comes back into, this was a Fibonacci level and some key overhead moving average resistance, and it pulls back again. But that's a good example of the cycle low retracement and then a bounce back up. So these are the cycles that you want to be able to navigate and catch. And then here's Walmart, cycle low, retracement reversal, again on a daily time frame. So this was a really great couple of different ones right here. You can see Walmart had pretty good sell-off. This is coming into that 200-day moving average. You get the cycle reversal here, positive momentum. We're getting then positive momentum here on cycle 2, cycle momentum reversal here, and then back up she goes. Here it is starting to turn over. You can see momentum going negative, pulls back down. Here's another retrace reversal off these moving averages, and back up she goes. So these are the cycles that you want to be able to catch, and these indicators are designed to help you, navigate these types of cycles. Now here's another one I just wanted to put in here to show you. This is the market bottom back in 2008, 2009, just to show you how these indicators are just super helpful, even from a big macro picture. So here was that big sell-off. If you were back trading back then, you know how painful it was. So this was a huge move that started back at the end of 2007 and went all the way through 2008. And then finally, we had a cycle reversal here. Okay, that was your first signal. Okay, potential for the market to start turning. Okay, but then the confirmation for the turn, we had cycle 1 go positive, 2 go positive, and there was the turn. But here was the first indication right here, a cycle reversal. So a fantastic indicator for picking, bottoms and tops. Now, the next thing that I always want to be aware of in this part of the system is to identify where we are seasonally, okay? So here's where we currently are on a kind of a seasonal basis. So these are seasonal continuation patterns, and this is the June S&P E-mini contract. So you can see we're currently seasonally, we're getting the very weak part. The second half, the mid to second half of February is seasonally very weak. All right, so you can see here, this is 5 years, 15 is the black, and 20, and the kind of magenta's 27 years. But here over the last 5 years, when we get to around right here where we are, seasonally we get a very weak part of the market, right, with the potential for a pretty big move, okay? And then we tend to get a good seasonal low about mid to middle part of March, and then we get a pretty decent, pop back to the upside. So currently, be aware of that. Seasonally, we're in a very weak period here, so I always like to know that. And if we're like down here, we've got the seasonality strength to our back. So these trades, we have better trading trades. Remember, if you were, trading back here in November, December, we had a pretty nice run to the upside, and a lot of that also was helped by seasonality. So now we're not going to have that seasonality strength to the market. All right, so it's going to make things even more difficult. And here's the NASDAQ. It's pretty much the same thing. We tend to get a seasonal swing high right here, the 15th. So you can see it's been pretty consistent, very, very strong seasonal pattern. Now, the 15-year is kind of interesting. It tends to trend up. But what this tells you is that the NASDAQ has been a little bit stronger than the S&P, but still, the higher probability is that seasonal push to the downside. So that's a look there. So I wanted to kind of point that out. Now, the next thing before we go any deeper into all the different trade setups here, I'll just give you kind of a quick market review here based on the indicators, okay? So let me pull that up. I'll pull this over, and you'll see we're going to use the S&P 500 SPX. And so what I like to do is kind of what referred to as top-down market analysis. So back when I first started out in the markets, we didn't have all these good trading indicators and tools. We just used macro fundamentals. So we'd go out, look at the big macro picture, and then we break it down to long-term and then shorter term. But now what I like to do is just take the monthly, and that's what I call the macro trend. So you can see currently we've been in a fantastic uptrend to the markets that really started. You can see the indicators where they, if you're following the indicators, we had a cycle reversal here, okay, right there. See that? That was back in 2023, okay. So we had the markets, starting to bottom out. So we had the cycle reversal right there, and then we had momentum positive cycle 1 and 2 right here. Right there, see that? And then what happened? We started, look at the momentum cross right there, that orange. And then we had this trend start and boom, fantastic trend. It's been holding that 20-period moving average. And then this is the 8 period, just a really strong trend. Now we're starting to get a little bit of a, we're starting to get a little bit of a fade here. So we're getting a little bit of exhaustion coming in. You're seeing the cycle reversals arrows popping up. So typically when I start seeing a third arrow like this 3 times, this is when we start really, I take the market with a lot of caution. So you can see the last time this happened, now this is macro, remember this is a long term. The last time we had these cycle reversals, and typically when we get 3, a cluster of 3, that's when it starts to really come off. So the last time we had that was back in 2022, right here, January 2022. So this is something to be aware of right here. All right, and so that's something to throw some little caution out there. That doesn't mean that the market's going to crater right now, but because these are monthly, so it could still. Here it is, and this was in December, January, February. So it can still go, but just be aware of it. Be very selective with your trade setups. And here's the extreme range bands. You can see it really more clearly here. So this is one tool that you'll get. So here you can see it's up to this 3 ATR right here. Okay, so very overbought on the monthly. Okay, so it's just a grind. So, but these things can grind for further periods of time. So you can see the last time we had this was back in January of 2022. All right, so just to point that out. So that's where we are. The macro picture is we're kind of in a grind state. The markets are just still holding up. Here we are with the long term with using the weekly. You can see momentum on cycle 1 is going negative, 2 is positive. So this is neutral momentum. So the market, is just kind of stalled here. So with this kind of pattern, which are what I typically will look for, the indexes are just kind of stalling, but then we want to look to, identify stocks or, ETFs within certain sectors to trade. But the broad market indexes are just kind of stalling out, which doesn't mean they're going to crater, right now, but they're like stalling out. So there's not a lot of opportunity right there to do just the indexes to be long. And then you can see here is the S&P 500 SPX on the daily. Now we're starting to get a volatility squeeze. We do have cycle 1 and 2 positive, so there is a potential here for this to actually break out and have a little bit more of an upside. And the one thing that stands out that I noticed here too for that is that the NASDAQ 100 is showing a little bit more strength now with a very good volatility squeeze. See this? So this is the sector that's starting to get more strength coming back to it. All right, so you can see this. This is a volatility squeeze on the NASDAQ 100, and it's very close to breaking, or it is breaking these prior swing highs right there. So we may get another little pop up here and retest that prior high. And so that's what these indicators are pointing out. So you could do, trade the QQQ or stuff like that, or some look specifically within the NASDAQ 100 at the different sectors. So go within the sectors and be looking for, trade setups based on the NASDAQ 100. So for example, I'll show you this next for scanning for trades. Okay, so the next step, and this is a really important part, is how do you find the different trades before the herd. So I'll show you a couple scans that I use, and so this is one of my scanning process for using for spotting these breakout and reversals. So currently, like I just said, the broad markets are getting kind of top end of the range, but there still has some momentum to them. So then what I like to do is then go down to specific sectors, especially with the NASDAQ showing the potential for a little bit momentum breakout, then go to these sectors and look within the sectors like the XLK or the XLY, which would be a lot of your tech stocks, or even the XLC. So I'll be focusing like XLC, those sectors, XLY, and technology, looking within those sectors for specific stocks that are showing good, potential trade patterns to break to the upside. Okay, so those will be, then you want to be more selective on picking stocks versus just the, broad market index. But the broad market index looks like it has potential for a little bit more breakout momentum to the upside. So you can see how currently this is the 5-day sector rotation. You see over last week, we had good money coming into communication sector, money coming back into technology. So that's pushing that momentum up. And then you can see year to date currently, everything's up, right? With the big area, that communication service sector right there. All right, so that's where go back in, drill down, and find a lot of trades. Now, here's a couple, scans that I do. One is for the volatility squeeze breakouts. And so this is, you can put in whatever you like to follow, and this scanner will pull out the volatility squeeze. So basically, you can see here when it shows 23, that means it's been in a squeeze for 23 days or 23 bars. And then it's color coded based on momentum. So if momentum's positive, be green. If it's negative, be red. So this shows you kind of a matrix of a lot of things that we're setting up here. And then I can go into the S&P 100 or the NASDAQ 100, and I can pull up anything that's in a squeeze. So here's kind of currently what things are looking like. I was trying to find something really good. I'm not seeing anything specifically that's great right now. Here's kind of a list currently of, this is kind of my custom list you can see here of things that are in a squeeze. Now you'll get this indicator. This is also a choice. If you want the squeeze indicators, your choice of one, you can use this for it, or this will be part of all the 8. So you can see what I do is come in here, click on this squeeze daily, and it'll pull up everything on my list that's in a squeeze. Or if I want to see something that's been triggered, I can pull that up, and it says, click on that. These are everything that's been triggered out of a squeeze. So you can see MBT was triggered, and I can even go back and look anything in a weekly squeeze right here. I can put in whatever time frame I want to monitor. I can put in from 1 minute all the way up to weekly. So I'm just kind of monitoring for these swing trades, the weekly, the 4-hour, and the daily. But here's a lot of things are in a weekly squeeze. Here's everything in a 4-hour squeeze. So if I just click on that, it'll pull up. I'll pull up my charts here. I can just run through these things really quick to see what's potentially setting up. So here, for example, I'll click on a few of these that are in a squeeze here. So this is a 4-hour squeeze. So this is the ETF JET. Here's one, CSX. This one looks interesting here. CSX is one I've got on the list. You can see this has been consolidating here now. If it can break, so what this is showing you, that momentum, see, is positive cycle 1 and 2, and positive on the 4-hour, but it really needs to break this this area here. Here's your moving average resistance. This is your 200-day and your 150. So that's why it's consolidating. So if it breaks this, it's got potential room to run to the upside. So that's one there. So I'm not really seeing any great trade setups right now. On the for squeeze breakout, the one that did pop up that I showed you was the NASDAQ 100. Actually, here's that one. And then QQQ, you can see a little bit of a squeeze here, but nothing too specific that really stands out on that one. Now, a couple other types of squeezes that I do look for is, here, let me show you another scan that I do. This is my momentum scan, and I'll pull that one up real quick. These are a few on the short side. These are based on momentum reversals, a certain scan that I look for, and I'll show you this in the course, but you can see there are a few setting up here, potential shorts like that could be worth watching. So a couple are like AMAT, Kroger's, Coin right here, AMAT, even Home Depot. And I'll show you a few of those real quick on the short side. So this is where I get all my trade ideas, either volatility squeeze or this momentum reversal scan. So here's AMAT. So AMAT just had earnings, but you can see it's starting to break some key areas of support right here. So if we look here, just to pull up this chart, and I'll just get rid of these fib levels. You can see it's got potential here. See, it's broken this, see this support right here? So it's broken that. The next really key support is going to be back down towards these lows. Okay, so that's AMAT. Another one that was showing that popped up was Coin, actually. These are all just had earnings too. So here's Coin. See, it's in a really tight volatility squeeze on the daily, but it's got good, what I look for, it's got a squeeze on the daily, but it's got really good support down here to this 235. So really nothing too critical there. Another one that was starting to pop up was Home Depot. See here, Home Depot. Now Home Depot is what I'll be looking here for this one is, you can see it's just chopping into these key moving averages. It really needs to break this area here for it to break down. Now, here are the indicators that you'll get. These are also what I call support resistance package. So you can see that dash green, that's the prior. So this is on a daily. So the prior week high for Home Depot is right there. The prior week's close is here, prior week's low. So, it's in a volatility squeeze here currently. But not seeing any really specific good trades right now, to be honest with you. So that's a look there, but that's where I find them. Now, the last trade, the trade that we did do, if I can get my charts back up here, I'll show you a few trades that we just completed here from breakout reversals based on, the alert systems trades that we've done. So these are some breakout reversal trades that I want to go through. So first off, here are some futures. So we can use the indicators on anything, futures, foreign exchange, whatever. So just show you a few examples. Here's a really good example. Here's crude oil. You can see and here it was a great volatility squeeze right here, back here. See, very, very, look at that price pattern right there. Okay. And then we started to have cycle reversals here, momentums turning back up. We finally had that good break to the upside. And then we started to get momentum coming down. Look at momentum, so first cycle reversal right there. See the reversal? And then momentum starts to turn, and then momentum cross here, and a pull back here. So that's kind of crude. We'll pull that up here in a minute if you want to look at it in more detail. So I just wanted to show you that. And then crude, here's gold. Here's with the indicators. Here's a really clean setup with gold. Back here, this was a fantastic one early in the year. Cycle reversal back here. This was at the end of December. And then we had momentum, cycle 1, 2, confirm. Look at that beautiful trend. Now it's been showing some patterns of, starting to get exhausted. So gold just keeps grinding up, but it's definitely getting overstretched, and it's been overstretched. Let's just take a look at gold real quick. But it just, everybody wants to buy gold, so it just keeps on churning to the upside, but it's starting to get pretty stretched. So here it is on the monthly macro. Here's just it's at the 3 ATR, so it just keeps grinding, very overbought. So, but the market doesn't want to give up on it, but technically it's getting very stretched. Here it is on the long-term weekly. You can see here it got up to that 3 ATR, pulled back a little bit, Here it is currently on the daily. Just got up here, look at that, last Friday. Got up to that 3 ATR and look at it, pulls back. All right, so that's gold. Let's take a look at gold a little bit here real quick. And since we're talking about gold, let's take a look. So you can see here, look, cycle 1 is going negative. Here's the 4-hour, really turned over. All right, so that's gold. And then here's, just wanted to show you, even if you do foreign exchange, here's your dollar Japanese yen. So great on these indicators are great. So here's a short setup. Here's Japanese yen. cycle reversal, and then we have momentum cycle negative, pulls back here. Here's a cycle low reversal right here. Momentum goes positive right there. Up she goes. Here's another rollover here. Negative momentum, reversal, 2 confirms down. And right now, you know, dollar yen looks like it still could go a little bit lower, or just it may start stabilizing right in there. Now, the next thing I want to show you is breakout reversals. Now, these are, you know, a lot of breakout reversals, what we've done. These are ones that I've sent out with the alert service. So these are, you know, confirmed trades. Now, here it is more accurate. I don't know how it got totally messed up on the, you know, payment link that I showed you. So we've had, since through the 14th, yesterday, we've had 835 trades closed out, 601 winners, 55 break-evens, 179 losers. So a win rate of 79% win rate. These are unaudited, but these are, you know, all the different summary of all the different, all 5 of the alert services combination together. So really high winning percentage is what I kind of shoot for to keep, you know, kind of low drawdowns. And so what I use is what we call Telegram. So this is a really fast, free service that I use. So this, when I do put the trade out, it comes out through Telegram. And here's one that we just did. So this was on Friday. So we had a trade set up on NVIDIA, and so did a couple things there. We had a trade set up on the Russell 2000. And then at the end of the day, I sent out an alert to make sure to take some profit on the trade to lock in that kind of trading edge. So I thought I'd show you a few of these trades. These are all based on the indicators that I'll be going over and teaching in the course Friday. But here's one that we just did recently. This was on NVIDIA. So we did this on Thursday, and NVIDIA was trading at 133.98. And we took a little profit. I sent that out tomorrow or yesterday, Friday, to take a little profit. But here's what it'll look like when I send out the trade. It says new NVIDIA long, trading at 133.98. So here's the pattern: cycle low, retracement reversal off the 150 moving average, breaking back above prior week's high, testing the 50 simple moving average daily in the 21. So sent this out with targets, target 1, and I put into, we did a condor, we call it long condor. So went out to next week, 21 Feb, and bought a condor here. I'll show you this in a minute. The 134.37.43 at $1. And then yesterday sent out this alert to make sure that you take a little profit. Here it says, make sure to take some profit today to lock in that trading edge, and then hold the balance with an adjusted break-even stop. So this was up $40, $45 going out yesterday. So that was sent out. So here's the directional trade. So we did this trade here. So it was based on the indicators. I got the indicators were giving me a buy signal. We had a cycle reversal right there. So you can see NVIDIA had been selling off, right? And so then it was starting to stabilize, but I wanted to make sure and get confirmation to it. Then we had cycle 1 going positive, and then 2 confirming it. So we jumped in on it when it was breaking this key area here, these prior highs. So got into this on Thursday, and then we had that final break above that 618. Now what we're targeting is there's a gap fill area. So if nothing crazy happens over the weekend, we're going to probably fill this gap at 141.88, and we'll start taking a little profit there and see. It should probably stall then in here, but it's going to probably most likely fill that gap. So that's why this trade was taken and set up that way. So here, let me just put it, I'll show you the gap area. I love to look for gaps. So here's NVIDIA, and you can see that gap right there. I'll just take off these indicators so you can see exactly here. 1 second here. See that gap area? See where it is? Look at that gap down. Now it's back above the 618. So good high probability is going to fill this gap when we come in next week at 141.80. And then probably will maybe stall in here. It could rip up to like this. It could go up to your a little bit more, you know, how NVIDIA is, but that's what we're looking for. So what we did on this trade, and this is why the service is so good, you know, we've got a 3-day long weekend. So if you're trading and you're using options, you've got the problem with time decay, right? So we did this trade. Let me find my trading analytics. So we did this trade to take advantage of positive theta. So we did this as a what we call a long call condor. And so, you know, when I send out these alerts, I mean, a lot of members just do their own thing because they're just looking for the trade setup. So this was based on that momentum breakout, looking for the gap fill. But we did this to give us a positive theta on the trade. And so you can see here, we've got this theta, we've got a positive theta, $8. So if it doesn't move, we're going to make money. So this is where it went out, $45. But we've got a potential right in here next week. Got a lot of profits still baked in there. So this has potential to make $200 here if we go out between these two spreads next Friday. But we're up a little bit, 45, lock that in. And then, you know, that gives us what, you know, what I refer to as that trading edge. Okay, so that's NVIDIA. And then this has potential, just to show you, to make, you know, $200. Our risk is 100. And, you know, that's the NVIDIA trade that we currently have on, currently right there. Then here's another one we did just recently. This was another, you know, breakout to the upside trade. This was on CCJ, the uranium. And so this came up on a scan. So did this trade, and I'll just flip through here, but this was an alert trade. And so here was the trade set up. Again, just the same things I'm looking for. Cycle reversal right here, which is, you know, these are all the tools you'll get in the course. Then we had positive momentum going positive. We had 2 confirming here. So got in right here. Here's our moving average momentum break to the upside. So we got in right there and then got out here and here using Fibonacci. So somebody asked about Fibonacci. That's where we got out, right there at that Fibonacci level. So these are swing trades. This trade was in for 1, 2, this in this trade 1, 2, 3, 4 days and then out. All right, so this is what we did, a calendar diagonal. And so these are some of the alert, this was the alert trade sent out doing a what we call a call calendar diagonal, and did a couple adjustments, etc. But ended up with this trade, set the trade up. We had $1.86 was our spread cost. And then the spread blew to 483, so we're up $297, 159% return. All right, so that was one. These are, again, these are trades that were picked up with the scanner to find the trade, and then the indicators for, you know, the setup. Here's another one we did not too long ago. This was on XLE. This was another long trade set up, and we did this with another call calendar. So we did this trade here in XLE, same. If you notice, everything's the same. Cycle reversal right here, see that? So that's an alert that we're starting to maybe cycle low, starting to bottom. Then we had momentum cycle 1 go positive right there, that arrow. And then we had, we ended up taking the trade right here. We got more aggressive. We were using a 4-hour time frame, which you can't see. And then we had that move back up. So got in there, profit take right in there, and profit take there. This one actually had even a bigger move, but that's the basis of the trade. We did this one with a long call condor. So we were, on this one, we were did a couple of different adjustments with the trade. We're actually ended up being in the trade with 0 risk. We had a credit, and so then the spread blew to 189, and we had a credit from some adjustments. So this was up $192 per spread. So that was a really cool trade there. These are all based on these indicators, based on direction. And then here's another one that we did. This was at Apple. This was a long trade here. Apple was trading like 228. So again, if you look here, you just everything if you didn't look at the name of the stock or security, they almost all look the same, don't they? So here's reversal right there. Cycle 1 momentum go positive, then 2 goes positive here. Then we have a momentum reversal here, and then we got in right here when it was breaking that price action there and breaking this Fibonacci level and breaking back above the 50 simple moving average. So got in there and then had a nice break to the upside there. So that was a beautiful trade. All the same, you know, step by step by step. And we did this with a we call a long call condor. So this was a really defined low risk trade. So our total risk was 82 bucks. Spread blew to 249 and made 167 per spread or 203% return. So that's another, you know, trade based on the indicators. And then here's one that I wanted to show you. I mentioned this to a number of people and they wanted to see it. So the scanner for wealth charts, maybe I'll have to see if, I might be able to do that. Yeah, you want to see some current charts? Yeah, so here, I'll show you. I'll show you whatever you want to look at. But here's one trade that we did also with the indicators, and this was what we call a penny trade. So this is one that sent out to the members, and this was based on something that we found with the scanner, but also then looking at option activity and things like that. A lot of different things we put this trade together. So this is a really cool trade. But again, here's just look at what we're seeing. So we had a cycle reversal here, positive momentum here. And then what we're looking for, we saw a lot of heavy option activity at this 200 strike. So this is just to show you an example of kind of the other type of trade alerts that you might get with the service if you're interested in that package. So we did this trade setup doing a butterfly with a total risk of 12 cents or $12. And so just to not to spend too much time. So it was a $2.50 wide spread. It cost us $12 for the trade. And the potential then profit was your spread width of 250 less your cost of the trade. So potential make $238. That'd be 1,983% return. And this thing actually pinned right at 200 going out. We were scaling out, but it actually pinned right there at expiration. So right there at the end of the day, this trade was up $238 on that risk of 12. So it was up 1,983. All right, so here are a few more, and then we'll flip through anything you want to look at. We can look at with the indicators. Here are just a couple others. These are all alert trades, so just not pull them out of my hat, but these were trades that were sent out. Here was one that we did on Oracle. This was back on the 3rd of November. It was trading at 107. Again, same thing, cycle reversal, positive momentum. So here are the arrows, confirmation, cycle 2, right there, got in, boom, right there, up she goes. All right, so these are the ones I'm looking for. So I'm just very defined, just patient, let the trade come to you. Here's one we did on the short side. This was CRM. And so CRM, we had cycle reversal to the downside right there. Momentum goes negative right there. Trade entry right there. Break pretty hard. Goes from like 257, 253.50 down to 246 pretty fast, and even bigger move down. So that was one on CRM. Here's one on ConocoPhillips. Another alert trade, but showing you a short cycle reversal. Cycle 1 momentum, 2 momentum right there. See the arrows. Breaks down here. Down she goes. All right, so let's see what else we can find. Somebody wanted to look at some current trades here. Let's see what else we've got. Let me pull up. One that kind of watch it here is, well, the one we just did was NVIDIA. Hold on. All right, so that was NVIDIA. We did that. what I'm watching. So what I like to do is, identify trades that are potentially bottoming or topping, and then, we put those on the watch list, which you'll learn in the course, and then we'll wait for these the setup based on the indicators. But one I'm watching currently is Tesla. So you can see Tesla has had that. See, look at the volatility squeeze. See that? So this is a really good example of the squeeze to the downside. And see how tight it was consolidating here. And then you can see the first right here, we had the cycle reversal, and then we had momentum going negative, momentum cross, and here's the squeeze, and then the trigger, price trigger would have been right there, that break of that 376, and then we had a big flush quick down to this area. That's the 100 period moving average. So be watching this for a potential cycle low reversal on Tesla. And yeah, SLV, UNG, yeah, let me write a few of these down. We can look at UNG, AXON, silver. Yeah, John, yeah, the indicators and everything, again, just put in that link there, right there, and then use DIR 15, and then pick your package. All right, so let's put up a few more here. So somebody want to look at AXON. No, it still has potential. Well, let's see. Okay, this is the other indicator that you'll get, or you have a selection to. This is my multi-squeeze time frame indicator. So you can see here, if I'll get this lined up. This is a great indicator. So see this down here. So you've got this bottom row right here. That shows you every time frame if it's positive or negative momentum. So you can see that momentum has started to fade here from the 3-minute up to the 20-minute, but still positive on the 30-minute up. But the 4 hour now is starting to go negative. See right here, in the 4 hours in a squeeze, and then the daily is also negative. See that? So it is potentially starting to top out, but it's it still has potential to go up. It's not totally topped out. See, 2 is still positive. So the way that I would look at this trade is that it's in a squeeze. So if it starts to break this level here, these lows, that's coming in about, call it 645, that area there, then has potential to break harder to the downside. Really, it really needs to break this 50 simple moving average, 625. And that's also, for this to really break down, this trade really needs to break this area here. See that dashed red? That's the prior, that's also part of the package support resistance. That's the prior week's low, and that's coming in right at the 50. So this thing really needs to, I mean, it could intraday could pull back here to 630, 35, but that's big support there. So with this one, if you want to play it intraday, here's the 5-minute. You can just kind of see what's been going on. It's really just been grinding up. So on the 5-minute though, if we start to break this 680 right here, starts to break this 678, then we could easily get a pullback. This dashed green, that's the prior day's high, prior day's close, prior day's low. So if you're trading this intraday, if it starts to break this area here, the 678, then the next support is 674, then down here. So you've got about $4 there, then another 4 there. So, that's about what you're looking at on intraday basis. And then let's take a look at so if you don't, so the arrows, this is part of the package. So if you, this is called a MoFlow indicator. Let me show you what this is. So the arrows is an add-on. Somebody was asking about the arrows. When you get just the core indicators, the arrows don't come with the core, it's an add-on. So these are called the multi-time frame squeeze momentum alert. And I'm sorry, it's the this one right here, the MoFlow signal trigger. Okay, 197. So if you go to the website, if you bought it there, they're 197. This will give you the indicators that are linked to cycle 1 and cycle 2. All right. So if you could get that if you did course package 1, for example, that could be your selection. Course package 1, you get a choice of any indicator except for the core model. So you could get this one if you wanted it to right here, that MoFlow signal trigger. All right, so there's a couple others at SLV. Let's take a look at silver. And then somebody want to look at UNG, natural gas. Silver, we had a pretty good pullback reversal. Let's take a look here. You see silver, it's getting pretty stretched. 3 ATR. So you can see where it came up here. And that really big rip got really stretched and just had a pullback. And it looks like just kind of a mean reversion. Looks like, it could pull back here. Yeah, it's losing all of its momentum. See here, see that bottom row? Every time frame now is negative on cycle 1. So there's potential for this more of a pullback. And looking at support, here's your first kind of support. This is the prior week's close. So looking at this area here, 29, which are all already there, and then back to this area here. This is the prior week's low. So 28, and then good support right there. Okay, but definitely wouldn't be buying silver. I'd be taking some profit or selling calls against it if you're long. Lock it in, some hedge. And then here's UNG, natural gas. Momentum's still good, but that's a really not a good pattern. Put it this way, I would not be buying natural gas here. If you're long natural gas, you want to be taking some profit, or if you're long, selling some shares or selling calls against it. So definitely don't want to be buying natural gas here. Not to say it can't go big higher, but this is not a good risk reward entry point. You wanted to buy natural gas right here, right there. See here, this is a good example of a cycle low retracement reversal. So here's natural gas came down to this big cluster of moving averages. That's the 50, 200, 100, 150, huge cluster. And then look what happened. We've got just the same steps. We had a cycle reversal here. See that arrow? And then we had everything go positive. Cycle 1, 2, momentum cross. There was your entry right there, 1739. Then we had a nice pop to the upside, back to those prior highs. Now, you know, it's probably going to pull back here, fill that little gap, and then pull back down there, and then, you know, it could go back higher again. Meta, let's take a look at Meta. Beautiful, beautiful trend up. Look at this volatility squeeze. That was beautiful. See how tight it was right there? All right, see these, see that? Now, look, so this was the setup. So here's your cycle reversal way back here. And then we had cycle 1, 2 was positive, squeeze. That was your price break right there. And then let me just show you here. So, but you know, you need to be focused. Obviously, you can't follow everything, but here's the perfect trade setup for Meta. So you can see it's churning sideways, your prior highs, right? Then momentum starts to go, cycle 1 and 2 go positive. So here it's in a squeeze, so you break it, you buy on the break of these highs right there. That's your, what I call the price trigger. Right there, you see it breaking those highs. The momentum. So, but you can see momentum starting to falter here. The 2 still positive. You can see the last time that happened. See here, cycle 1 starts to pause, 2 goes negative. It comes down, holds the moving average. So this one, probably the next step with this one is going to be a pullback here. So be watching this. If it starts to break on a closing basis, this area here, 708, then it's going to pull back to that 21 period moving average right there, 687. But with this one, it's not a good risk reward entry point here. Look at this weekly, so it's really stretched. But if you're long, you know, it just keeps grinding, just be selling upside calls against it. But you're now at the 3 ATR. And if you look at the monthly macro, wow, yeah, this thing is super stretched. I would not definitely be buying it here. Doesn't mean it can't go, but this has just been a great trend, but something, it'll eventually, it's going to pull back here. See right here, when this starts to turn, see this white, when that starts to cross the yellow, that's going to be the signal. So just be watching this actually for this to falter here. Probably it really needs to get the 4 hour still strong. It's not an entry to buy, but it's just still holding up. So this thing, if it does pull back, it's only going to pull back to probably this area in here. AMD, let's take a look. Yeah, DIR, yeah, use that link there, Barbara, then DIR 15 and whatever package that you want to select, and that'll give you that 50% off. AMD, nothing right now. Now, this is one to, you know, put on your list, but we need to see, it's been in such a hard downtrend, you need to see cycle 1 is positive, but 2 still negative. So there's a lot that has to happen to this one before it's time to buy. All right, so need to get, it's just a really ugly chart, and there's so much overhead resistance, but this is when cycle 2 goes positive, then we'd start looking at it. But this thing has just been really need to see it on the weekly to see that turn, which is getting close. All right, here's the deal with, here's the way and I'll be looking at this one because I've been watching this, but here's the way I'll play this AMD. So this is the weekly, which I refer to as the long term, okay? So you can see it came down here, broke. This is the 200-day moving average, 200 week and the 150 week. It needs to get back above this price point here, and it needs to start consolidating, and then see cycle 1, at least cycle 1 go positive on the weekly, and then start watching it. Okay, so look back here. So this thing, again, it went sideways for 6 June. This thing went sideways for 4 months before it started to break. See this squeeze, and then it broke. So you just need to be, you just need to have a list and be patient. So this is not one to do anything. So back here is kind of pretty good. This is probably maybe what we're looking at. It needs to get back above these key moving averages here. And then you need to get cycle 1 and 2 going positive on the weekly, and then that's going to show you the strength. So it's dead money right now. It has to get back at least above these 200 week and 150. So it needs to get back here above 118, 119. And then you need at least cycle 1 going positive on the weekly, and then you start watching it. So you don't need, just all you'd have to do is monitor this with the indicators. And when that goes positive on the weekly, then you start watching on the lower time frames, the daily and the 4-hour for the turn. But right now, it's a no buy, it's a no touch. And I wouldn't short it here either. So you've got next support. You could, it has broken this. Actually, it could be a short for a move back down to these lows of 94. Let me put this up. You can see where it needs to, where it could go. Wow. And the thing is ugly, man. See, it's broken. This is really key support. It broke. So if it cannot get back above, let's call it 117, 118, this then has potential to go back down to these prior lows. We're talking down to this, what we call price action support. So the first support will be basically down to about 100. So if it can't get back above here, it's got to get back above this level here on the weekly. If not, next area is to 100. And then there you go, okay? This is really not one to start trying to take shots at again until you get that cycle 1 going positive, then you can start watching it, but it has to get above, back above there. TLT, let's take a look. Here's TLT on the weekly. You've got momentum cycle 1 is positive, but 2 still negative. So it's neutral momentum here. Then if we look at the daily, see, the problem with TLT is just has so much overhead resistance. There's not a lot of great upside to it. I mean, you had this, see here, you had that cycle low reversal here. So right here, but there's just so much overhead resistance that just didn't have a lot of upside. See this area here? This is where it pretty much stopped. It's what we call price action support or resistance right there. See that? It's like a ceiling foundation. So just not a good picture. What you really want for your better trades, you want to start getting good momentum, but preferably you know, with less overhead resistance. So, you know, they're better trades, put it that way. But would not be buying TLT here. Let's see, get rid of this tool. Yeah, see, it's got this gap. It's going to probably pull back and fill that gap at least, and then probably could easily pull back in this area here. Then, you know, what it needs to do is kind of build a base right down here. See that? So if it can just start to consolidate in here, next step will be for consolidate here and then push up to this next level. But it's going to be a slow grind. It's going to be, because it's got the big, huge resistance up here at 92, 93. So you can easily, you know, consolidate here, and then you start consolidating, and then you start breaking those highs there, 89. Then it's going to be potential back up here to call it 90, 92 and a half. And then it's going to have to do probably the same process there. All right. And Starbucks, yeah, we can look at Starbucks. So you can do this own analysis with the tools here and just sign up for the course. And next Saturday, I'll show you all that you need to know. Let me get rid of these right here. So Starbucks, you can see a cycle reversal. We've got 3. This one's starting to stall out. Definitely would not be buying Starbucks, but actually, this one actually I'll put on my short list. Definitely on the short list. Thanks for pointing it out. All right, so this one has some good potential downside here. If we look at Starbucks, we can, cycle 1 is going negative, 2 is pulling back. It's very overbought on the daily. Look at this. See this yellow? That's the 14-period moving average of this indicator. See this reversal, reversal, reversal. This one I'll be looking for a short trade setup. See this daily? Typically when I get 3 together at the 3 ATR, this is a short now. What this could be a great short trade for, you could do a fair call credit spread out of the money, because it looks like it's just going to, even if it turns sideways, it doesn't have to roll down. But if it breaks this area here, this 110, then there's probably a pretty quick move back down. This dashed red is the prior week's low. So I'll be looking next week, watching this on a break of 110, then a potential easy move back to 105. And then here, you know, put our fib levels in And these are why fib levels are so important. So, and this will be, part of the course, we'll be talking about Fibonacci, how to incorporate it. Let's see one thing. Is that high was 113.40. We still really need to see Monday or Tuesday have this below, but you can see the Fibonacci level. Gosh, this bottom line is this definitely is not a buy. It's very close to a counter trend short. Yeah, very close to a counter trend short, and I would use like a break of this area here about, let's call it 109.50 for a move back down to 107 and then see where it goes. I mean, it's not going to be just a avalanche down. It could be, but this is definitely going to be some kind of a counter trend, reversion trade. So bear call credit spreads up here, or we could do a targeted trade with a calendar or something like that, but definitely not a buy. Now here's perfect buy setup. This was back in December. If you look at this, see, perfect. Yeah, this is a great. See this again. Look at this sell-off. Okay, look at the steps. Step 1, 2, 3. Look at this. Okay, so cycle reversal right there. Momentum cycle 1 goes positive. Now look at it. Just churns, right? Now then what happens? Cycle 2 goes positive. And then we start getting these momentum crosses right here. So it's holding this 150 and then we finally get the turn. But this was a slow grinder, but this was showing you it had pretty much, was close to bottoming out. And then finally we get that additional momentum reversal right there. It starts moving. Yeah, and here's XLE. XLE doesn't look good. It needs to get back above that 200-day moving average. That's the prior week's high. But XLE is a short if it starts to break. Really needs to break this area here. This 86.50. It's just kind of churning sideways. You've got this kind of range. So it's not, it's not one for a long or a short right now. It's just kind of grinding. So when you see these kind of patterns, you don't look for something else. I mean, if anything right now, this one, you see momentum here from the 3-minute to 30 is negative. So it's just, it's a dicey place right here. So would not be doing anything. See, that's not a very good close. That's kind of a shooting star. And then USO. The yellow line is the moving average, 14-period moving average of this reversal indicator. So you'll learn this in the course, but this is the reversal signal comes when the indicator, which is the white line, crosses the yellow, which is the 14-period moving average of it right there. See that? That's a reversal. Now, what I like to look for is the reversal from a very overbought. See that blue line is a 90 percentile overbought. So you can see here, had that reversal, and it just starts to gradually come off, right, in that situation. Let's take a look at USO. So USO really, when I look at USO, I look at the underlying crude futures, and then if you want to trade USO, but you can see here it's on some clustered big moving average support right here. See, that's 150 to 200. So it's kind of what I call a nothing trade. It just doesn't have enough momentum really turn it right now, but it's holding the support. And then if it does break, it's got more support down at 72. It's just not a good setup unless you're, long-term crude trader. But see here, if you look at just crude futures, it doesn't look good. But it's just one that it's got huge overhead resistance, 200-day, 150, 100. Momentum's negative, so this thing just looks like it just wants to drift lower. Just not much. See, but it's got this support area here. See all that that's just a sloppy. So it just could drift lower. It's just not, kind of range. So it could drift from 70 down here to this area here, 65. And then it will have to deal with 65. It could sit here for weeks at a time. So just nothing exciting about it. So find something else. That's basically what it is. The courses are all recorded and you have access for the courses forever, okay? So let's go back through everything. So if you sign up, it's yours forever. All right, so again, use that special link and let's go through everything. And then if there are any other questions, so the course will be next Saturday, 22nd. Everything's live but recorded. Then I break everything down in 30-minute modules, like a chapter or less of like a chapter of a book. So it's a very extensive course. I'll do this maybe twice a year. So it's a 4 to 5 hour course, but it'll all be, recorded. All right, so then if you do course package 1, you'll get your choice of any of these indicators. The only one that you're not going to get is the core model, but then you can have everything else. So if you go to the website, you can have the volatility scanner, you have the momentum alert indicator, anything, okay? And then you're also going to get my Fibonacci price target mapping course. You're going to get my momentum crossover indicator. This is a fantastic indicator. You've got a 30-day trial membership to the trading club. You can start this whenever you want. 31-page futures trading tutorial. The trading tutorial is power cycle trading model with videos. So everything, this will be it's 197, but if you use the promo link today, you get it for 167. Okay, so that's your choice of one, and make sure you put in that DIR 15, DIR 15. And these indicators, again, it's what I've been using basically since 2010. And so all the alerts that I send out are based on these indicators. Then if you do package 2, this gives you all my indicators. So if you go to the website, you'll see all of these indicators, and you'll see everything there. But this is everything I've got. And these are all the ones I've designed. Everything here. You get all 8, everything. If you do package 1, you get a choice of these. Okay. The only one that you're not going to have with package 1 is the custom core indicators right here. Right here. Power cycle custom directional trading indicators. This is a 5-step study set. Now these are all available for Thinkorswim, TradeStation, eSignal, NinjaTrader, and also Trading View. I do have them for wealth charts, but you have to go through wealth charts to get the indicators. All right, so that's everything there. So you get all that plus the Fibonacci, because we're going to use that in the course, 30-day trial membership. Now, if you want the alert service, to add on to it, then you'll get 5. I have 5 different alerts that I send out. And so you'll have this for the next 4 months. You can start and stop this your alerts whenever you want. So if you do go on a vacation or business or whatever, you can start and stop so you don't have to, lose your time. So a lot of the members, when I send out a directional trade, they may just buy calls or puts or whatever, not do anything. But or shares, but when I send it out, I'll always give you an option trade that you can use. Okay, so these could be breakout reversal trade setups. So these would be like debit spreads or credit spreads. Do a lot of butterflies along condors. That could be it. Do a lot of counter diagonals. That can be one. Do butterfly pinning trades. So those could be one, or earnings. Okay, so 5 different types. So then you've got the 2 different packages that you can do. So if you do package 3, that would be like doing package 1. You get everything, you get all the alerts for the next 4 months and your choice of one indicator and all the bonuses. So it's $597, but today it's $507. Just use that promo code DIR15. But if you want then all the indicators with the alerts, that's package 4, and that's $797. So basically you're paying $100 a month, which is a great deal for the alerts and the access to the trading club. And then the difference is what you're paying for all the indicators, bonuses, et cetera. So that's the other way you can look at it, so it just basically comes down to, if you did $697 and you take off the alert service, that's what you're paying for. Okay, so then you get all the different alerts that I send out, if I, whatever it might be. These are always stocks or ETFs, so tend to be 8 to 12 per month, and then a trading guide for each. So like I said, a lot of members just, if I was to send out an alert saying do a directional trade, which could be a call calendar or do a butterfly or condor, then those are just directional trades. Then you can just, if you wanted to, just buy calls, buy puts, but or shares, but I always give an option strategy because I like to keep the risk really controlled for you if you want to do it that way. And so that's what's sent out. And then you get the weekly Q&A. When I do, you'll also have access to my trading club for the next 4 months. So that gives you access to my trade setup video reviews every day after the close, weekly Q&As, live and recorded every week. So you have that for the next 4 months. Video newsletter, like I said, every day after the close for the next 4 months. Virtual trading room access every day during the week for the next 4 months, and discounts on every course and software, 60% off. And so, our alerts have been since inception on the 18th of May. We've had 835 trades closed out, 601 winners, 55 break evens, 179 losers, 79% win rate unaudited. And let's just go through, what you're going to get here. With the course Saturday, I'll be teaching you the 5-step directional trading profits formula that I use, and then how to use the dynamic directional trading model. So this is the 5-study set model with the volatility squeeze, momentum indicators, all that, how that works, how we set it up, and then how to use momentum flows. So to give your price direction, forecast, and trend strength, how to validate it using momentum flows, how that works. How to use the cycle reversal and extreme range band indicator with the momentum for showing you and signaling you price exhaustion, which is kind of what is the advanced alert to a cycle change for a market top or bottom. How to use momentum crossover indicator, which is a super great indicator, which I use for all my trades. And then how to use the multi-time frame volatility squeeze indicator, which is, let me show you what that is. That's a super helpful tool right here. This indicator down here, you can see it. It just, so every time frame that's in a squeeze, not a squeeze, but that's positive or negative on the bottom row, it will be represented by a red, which means like the 3 minutes negative momentum, 4 minutes negative, 5, 10. And then the top row is anything in a squeeze. So you can see here on crude, it's got a squeeze going on in the 10-minute, 15, 20-minute, and it just triggered a squeeze in the 4 and 5-minute. So you'll get that, learn how to use that. And then, how to identify medium and long-term trends. How do you set price targets based on Fibonacci price target mapping? How to use moving averages, which I refer to as automated trend lines, to track trend and look for breaking trend. And then the best trade setups based on those 5 winning chart patterns, in the volatility squeeze. So we'll go through those patterns in more detail and specifics. And then a step-by-step process of how to trade the volatility squeeze. Now, the course is there are 5-step price entry rules. So these are very defined black and white entry rules that I go through in the course to show you. So it's not a gray area. So it's like I showed you earlier. Here's a cycle reversal. Step 1, here's your momentum. 2, 1, 2. Here's your momentum cross. Here's your entry, okay? So I go through 5 specific steps to make it very easy for you for all your trades. And so these steps are based on the cycle trading model, reversal indicators, and your multi-time frame. Okay, so all those are gone through in detail. Profit take rules, risk management exit rules. So very, 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 very disciplined course about how to use it. And then the 5 best trade setups. So we'll go through those using these different chart patterns that I look to identify. And then using the scanner for how to uncover the next big winner. So how to use a scanner to scan through and set that up, for, finding these volatility breakout potential trades and momentum reversal crossover type trades. So that scanner, I'll show you how that's used. So there's a lot to the course and a lot that I'll cover. So here's just a little feedback from a couple members. Pam said, literally lost thousands of dollars on other systems, but settled on Larry's. His technical knowledge is unsurpassed, in my opinion, and his knowledge of using strategies with low risk, high reward are the best I've found since started trading in 2003. Bruce said, Larry's expertise custom tools provide one of the best, if not best, method for identifying, entering, managing trades. The follow-up Q&As and trade room reviews of these methods on the current identified trades and understand the confidence of Bruce. Thanks for that. Ronald, best improvement to my trading has been by the addition of PCT momentum indicators 1 and 2. So those are just fantastic, if I may say so. Then the indicators here, they're all listed on the website, but here's just kind of a quick review. So the core model is the PCT dynamic directional trading model. So this is available for just package 2 and 3. So that's where you get all the indicators. And so it's a 5 study set model with the support resistance package, volatility squeeze indicator, momentum cycle 1 and 2. Again, these are available. You can have one or any of these platforms. So TradeStation, Thinkorswim, TradingView, Ninja Trader, eSignal, and then indicator 2 is my momentum flow signal trigger. So this is included. This is a choice of, if you do package 1 or package 3, with the alerts. This is a one that you get as a choice. So this actually gives you the arrows that pop up or down based on momentum. I've only got this available for Thinkorswim. And then I've got the multi-time frame alert indicator. This is where you get the multi-time frame and the whatever's in a squeeze. It outlines it for you on one chart that you can use. So this is available for package as a choice in package 2 and let's see 2 and 3. Let's see here. You get a choice of 1. If you do course package 1 or course package 3, you get a choice of 1. That should be course package. This should be course package 1 and 3. So you get a choice. If you do course package 2 and 4, you get them all. Okay. And this is available for Thinkorswim and TradeStation. And then you get my cycle reversal indicator. So this is available for Thinkorswim, TradeStation, and TradingView. So it's got an upper and lower study to it. So we'll go through this indicator in the course. Really great. This is where you get the cycle reversals, and so this is available as a choice if you do package 1 or package 3. And this needs to be changed. Sorry about that. And then my extreme range band indicator, this is where you get those where the markets are getting extended, either really stretched to the upside or downside. So you'll get that. And this is available for Thinkorswim, TradeStation, eSignal, Ninja Trader. This is another one I didn't really cover today, but it's a really cool indicator. It's my opening range breakout indicator. So it sets an opening range during the day at the first of the open. And that's really good for breakout trades, either up or down. So you'll get that, and that's available. Again, Thinkorswim, TradeStation, eSignal, Ninja. And then my volatility scanner. So this is where you can screen for volatility squeeze across any time frame once you set it up. Available for Thinkorswim, TradeStation, eSignal. And then you're going to get my price target mapping course. So this is a Fibonacci course that also incorporates what we call moving averages, price action support resistance, standard deviation target forecasting, and option activity to forecast price for support resistance levels. And then you're going to get my momentum crossover indicator. This is a really great indicator. You'll get this, as a course bonus, and trial membership. You'll get 30-day trial membership to my trading club if you do course package 1. If you do course package 2 with everything, you get that as well. And if you do with the alerts, you get it for 4 months. And then this gives you access to the trading room every day during the week, 9:30 to 10:30 Eastern, and then daily video newsletter after the close. Videos are archived, weekly Q&A every week, live and recorded, Traders Educational Vault, 6% discounts on everything on my website, okay? And you'll get that, and then we'll get a follow-up Q&A, and then that'll be live and recorded. We'll do this on Tuesday, the day after the course on Monday, finishing up that, and then you get that 30-day trial membership. Now, if you decide to stay on, then we've got different packages, or it's just $97 a month. And then I'll also give you my All About Futures trading tutorial and my trading tutorial on the trading model. So it's a lot of great stuff. Here are just a little bit more on the alert service. Dan says, very diligent and totally thorough with your analysis. That is the foundation of the success of your alerts. I paid for my subscription with the first 4 trades I took with you when I was learning how to trade options. Please feel free to share this with your students. Scott, best investment that you'll ever make. Go with the elite, great group of traders. And so, we went through that. But when I send out an alert, you can, do your own thing, or I'll always give you a suggested option trade. The entry level will be spelled out for you in the alert when it goes out. Profit targets, these are based on my Fibonacci price target mapping. What option series to use, stop loss levels. Trades are then also monitored, and I send out any kind of alerts as far as adjustments that are needed. So constantly monitoring the trades. Then I do a video of that trade. If I do that during the day, I'll do a video and include a video on it after the market close on why it was done. And you get the video newsletter. This is everything you'll get for the next 4 months. And then if you want to renew, you can. And then we do access to weekly Q&As every week during the week. Access to the trading room during the week, every week, and discounts. So a lot of stuff here. And we've pretty much gone over these. These are the calendar alerts. We do a lot of these. We've done since starting this back in 2019. We've had 323 trades closed out, 233 winners, 19 break-even, 71 losers, win rate of 78%. So these are unaudited. Those are the calendars. We went through a couple of these earlier, so I won't spend more time on these. And so this is that CCJ trade we did just recently. Here's another one, the XLE we did just recently. And then here's butterfly and long condors. We do a lot of these as well. So we've had, since starting this service back in 2019 as well, we've had 206 closed out, 147 winners, 14 break even, 45 losers, 78% win rate. Now these of all the trades, these are very low risk. Your potential loss $50, $75 per spread is the average, but you can get returns of 2 to 1 up to 25 to 1. So like that Tesla trade was close to 20 to 1. So these are, pretty cool. These are, just showed you this one earlier, Apple. And that's pretty much it. What package has a scanner? So here's the package. So if you do course package 1, you can have a choice. You can have the scanner as a choice. Okay, so here. Okay, now if you do course package 2, you get everything. But if you just want this, you can't have that as a choice. So use that, this will be 197, when I send this out to my other clients. But today, if you use that discount code, you'll get it for everything here for 167. So you'll have your choice of any of these indicators. The only one that you don't have a choice of is the directional, core model. But if you want any of the others, you can have that as a choice. And then you'll get all the additional bonuses as well. And so for your price today, 167. So that's the one that you would use. Yeah, so the scanner is included if you choose it. If you do course package 2, the scanner is included, all the indicators. You get all my indicators, course package 2. This is a great deal. 337, these indicators. Tell me where you can, you can't. So you won't find a better deal. But any place out there is selling indicators, and these indicators, like I said, I've been using since like 2010. All right, so that's that. And then if you want to include it with the alert service, then you've got your choice of either package 3, which would give you a choice of 1 indicator. And so today and these are also 2-pay if you want 2-pay. So it's 507 with the discount if you want a choice of 1 and all the bonuses. If you want all the indicators, it's today 677, and there's a 2-pay for that as well. And then the course starts next weekend. So we'll stop there. Any other last questions?